This is the Syndicate Room, an AI-generated podcast from AdValorem Syndicate. Everything about this show, the voices, the scripts, the production, is created by artificial intelligence. We believe AI content should always be clearly labeled.
And it's educational content only, not investment advice, and definitely not an offer to sell anything. It's market talk, research, and a little chaos.
Today we're going after three threads that are basically the same thread wearing three different hoodies. Mega rounds in venture, the mega-IPO wave in pre-IPO markets, and litigation finance trying to become the uncorrelated darling again.
The theme is, money is concentrating, attention is concentrating, and founders are like, cool, so I just need to be one of the three companies the entire world is funding.
Exactly. And quick housekeeping. If you're new here, we publish daily research at gp.advalorem.io. There's an education library, and there are community dinners with an interest list.
Plus, the Discord is discord.gg/GRGTP9GTS. There's a Substack, and a community application at tidycal.com/advalorem/syndicate. Again, community and education, not a pitch.
All right, topic 1. The venture market's new personality is mega rounds only. A May 8 VC funding digest literally lists $1.5 billion for Anduril, $1 billion for Scale AI, $600 million for Mistral, $500 million for Perplexity, $400 million for physical intelligence. It's like the cap table became a Costco receipt.
I'm sorry, Series B, $400 million is so disrespectful to my 2018 brain.
It's also kind of logical. If your best companies are compounding and you have fewer exits, you shove more capital into the winners.
Yes, but the side effect is brutal. The median founder is out there doing 12 pre-seed extension bridges, while the top 1% are like, we raised a small round, $1 billion.
The digest even says deal count is flat, but round sizes keep climbing. Capital concentrating into fewer, larger bets. So if you're not obviously winning, you're not even on the menu.
And the menu is AI infrastructure, defense, enterprise with traction. The vibe is less big vision and more show me revenue, show me contracts, show me retention.
Here's the nuance. We talk a lot about AI like it's a single thing, but the money is splitting into buckets: foundation models, data infrastructure, and then vertical AI like legal, coding, robotics.
That's basically one of AdValorem's research verticals too, AI robotics research. Not because we're chasing hype, but because robotics is where software meets physics, and physics has receipts.
Haha, physics is the only stakeholder that always answers your email. The robot either works or it doesn't.
And this is where I get spicy. Mega rounds can be a signal of strength, or a signal that the burn is massive and the company is buying time.
Totally. A huge round is sometimes, we're pulling away. Other times it's, we're building a runway long enough to reach the next macro regime.
Which brings us to topic 2, pre-IPO markets. Because when exits are scarce, everyone becomes a poet about secondaries.
Yahoo Finance had a piece arguing there's a fast-approaching mega-IPO wave, specifically calling out SpaceX, OpenAI, and Anthropic as potential IPOs within the next year. PitchBook's estimate in the piece says those three could generate over $100 billion in proceeds. That's cartoon numbers.
Cartoon numbers is right. And they also mention SpaceX aiming around a $1.5 trillion valuation for a mid-2026 debut, right? That's not a company, that's a small solar system.
If that wave happens, here's what changes. The secondaries market loses the big three gravity wells that pull most of the trading volume.
And if you're a buyer in pre-IPO secondaries, you're suddenly forced to ask, What else is institutionally liquidish, which could reprice everything else?
That's why we keep a quantum pre-IPO analysis vertical. Not because quantum is ready tomorrow, but because the pre-IPO surface area is changing. Secondaries are becoming a real market structure, not a side quest.
I love that you said market structure, because the pre-IPO story is really pricing power migrates to whoever controls access and information.
And the irony is, in public markets, information is standardized. In private markets, information is vibes, PDFs, and trust me, bro.
Trust me, bro, is the official SEC filing of secondaries.
Okay, topic 3. Litigation finance. Bloomberg Law highlighted Corbin Capital Partners closing a first dedicated litigation finance fund at $342 million, with 26 investments and just under 30% allocated to mass tort.
They also mention Legalist closing a $415 million fund. So clearly, the lawsuit as an asset story is still attracting capital.
The pitch is always uncorrelated returns. And yes, there's logic. Legal outcomes don't tick with the S&P day to day.
But correlation isn't the same as risk-free. It's just a different kind of anxiety. Like, will this case settle in 18 months, or will it become my retirement plan?
Exactly. Duration risk is real. And there's also transparency risk. You're underwriting facts, judges, venues, law firms, financing stacks.
Which is why we've done educational work like the new chip warrant case study and accelerator warrant enforcement education. Not as deals, but as, here's how the plumbing works when contracts get tested.
Right. And from Bloomberg Law's framing, part of the appeal is also being less tied to equity market moves, like a credit-style strategy without some of the same exposures investors worry about elsewhere.
So let's connect the three topics. Mega round concentration plus fewer exits pushes pressure into secondaries. And that same search for non-equity drivers pushes people into alternatives like litigation finance.
It's like everyone is building a portfolio that says, I don't trust the public market regime, I don't trust the private exit timeline, and I still want return targets.
And then they discover you can diversify the return drivers, but you can't diversify away the human tendency to overpay when everyone is excited.
The most correlated asset in the world is FOMO.
Practical takeaway for listeners. If you're tracking these markets, build a checklist. For venture mega rounds, what's the actual revenue engine? For pre-IPO, what's the information quality and transfer restrictions? For litigation finance, what's the duration and who sits senior?
And if you want our daily notes, again, gp.advalorem.io. The education library is on the site. Discord is discord.gg/gergtp9gts. Substack is advalorem.substack.com, and the community application is tidycal.com/advalorem/syndicate.
Community dinners too. Interest list only. No pitch, no promises, just smart people and good conversations.
All right, that's the show. This has been the Syndicate Room. Next episode drops Thursday. And reminder, this podcast is AI generated. Voices and scripts are created by artificial intelligence. See you next time.